Hello everyone, February 19th, 2026. Let's go over the trades I took today. And we always start looking at the momentum of the daily chart. That way we can get a gauge of what's going on. We just look at the daily chart, look at the current levels, look at critical levels. You can start to see things if you just look. And on our momentum, we've got a fight going on. We had a huge sell-off 2 weeks ago. And now we've been in limbo for the past week. And now as this week is coming to a conclusion, we are seeing a fight, a tug of war. We're clearly at a level of high interest right here. This region in the NASDAQ. The price does not like being here. It's very unstable. It's going to shoot in one direction or the other. And you can see that with the volume. So the volume is sustaining, and you can see that there is fighting in the momentum. You can see the stalling. Once you look at this long enough and you start doing this every single day, you can tell when we're in areas of high interest, high pressure areas. You can also see this with things like volume profiles and such, so you can actually see there's indicators for that out there, obviously. Either way, before the day started, the only thing we knew before today happened, before the market opened, the only thing we knew was that the momentum was reversing to the upside. Because the previous day, right here, ticks up, which is the momentum. Bunch of green volume past 2 days. So we just knew that buying pressure was increasing. That's all we knew going into today. Let's look at the trades I took. First trade was in NASDAQ. And I took the trade right here. Why? We had a volume confluence that flipped on me. See how this is red right here? So this was green when I took the trade. And I took the trade right here on this candle. This red volume bar was green 5 seconds, 7 seconds before the candle closed, before it stopped and printed. So I hopped in the trade. And then the last 5 seconds of that 3-minute candle, it flipped red. This is no longer a valid volume confluence any longer. And it sure enough, it did hit the stop. That was a loss right there. Now let's go on to the second trade I took. Second trade, right here. Why? Why did I take this trade? Why did I take this trade? Is this a trade I took? It doesn't make sense because there's no volume confluence, so that would be strange. Did I take that trade? No, it was here. This was accidentally, yeah, this got shifted over. So I took the trade right here on this candle because we had a volume confluence. We're on the right side of the momentum, just like before. Next candle also got this stopped out as a loss. Super rare event, by the way. We had a very rare event with that, but again, I could have waited till the candle closed technically, and I would have avoided this non-volume confluence. And then this one would have been a legitimate loss. Next trade was in Atom. This was another mistake on my part. Why? Because the 5-minute MACD was not increasing. It was a valid volume confluence, a volume bar greater than the previous three, aligned with the direction. We had a tick up, momentum going up. The 15-minute was going up, the 30-minute was going up, but the 15-minute was selling off, and the 5-minute was not going with the direction of the trade at all. It had been selling off for a while, losing momentum. So it's a no wonder that this one got stopped out as well. Stop loss was right here. First profit target was up here. So that was another loss, unfortunately. So that's 3 losses so far, 2 of which could have been avoided. That is the lesson. That's the lesson of today. I also took 4 more trades that we're about to get into right now. Next trade was in NASDAQ again, and it was the third yellow line. Every time a yellow line appears, it's because I took a trade there. This one happened to be a win right here. Our profit target was hit, and the 5-minute was sketchy. 15-minute was strong. and the 30 was flipping over at this point. This is what the 30-minute looked like at this exact point. Next trade was in car. I see car selling off. Where are we? There we are. I see car selling off here early morning, beginning of the market. And then we come up, classic, look at the momentum. We come up, the 5-minute comes up, and I'm waiting for the 5-minute to start turning down to the downside. 30-minute going down, 15-minute in the red, 5-minute is grinding up against the momentum. So as soon as this 5-minute gives way, that's how you know we've got a nice opportunity. So what do you see right here? What do you see? The 5-minute is not giving way yet. But right here, the 5-minute is now moving down. Strong 15, strong 30. 5-minute is now going down with the trade. That's how you know it's time to take the trade. I entered right here. First profit target was hit. Stop loss never got hit. So my runners continued running. And I sold my runners literally down here. That was a great trade on the day. Next trade was in Intel. I looked at this chart, and at a glance, I immediately noticed, just barely looking at the chart, okay, I looked at the chart right at this point in time, about right here, and I can see the wedge. Can you see the wedge? This is pretty obvious. Look at this wedge right here. See this? And then see this? We are in a wedge. This is a classic wedge. But what is happening? When I started to look at it, when I tabbed over and looked at Intel, what was going on? The 5-minute was pulling to the upside. The 15-minute was strong to the upside. The 30-minute had crossed over at this very point in time. It was crossing over. So I'm thinking, oh my gosh, this is a wedge break right here if I've ever seen one. And it was. I entered right here. Why? We had a volume confluence, volume bar greater than the previous three on the right side of the momentum. Entered right here at the close of the candle. Stop loss slightly below. Profit target was hit. Wonderful win right there. Wonderful trade, wonderful wedge break. And then, of course, reversed all the way back down. That's pretty funny. And then it literally came back to equal like nothing ever happened. That's the stock market for you. Last trade of the day was a loss in Apple. I took this trade, I'll be honest with you, I took it kind of out of desperation. I did, I'll be honest. And the 5-minute just wasn't pretty. It just was not pretty. And it's important to note that there was a lot of other entries that I could have taken up into here that I just didn't see. I wasn't paying attention. There was a lot of entries up here where my runners would have been running for a huge win. I didn't take that though. Nope, I took a trade right here at the end of the day. And the moral of the story is, I took the trade because I followed my rules. Look, volume confluence, 2x3, 3 volume bars, last one greater than the first, 2 minimum aligned with the direction of the trade. We're going down in the momentum. The 5-minute hadn't concluded yet. And it was sort of going down. But it wasn't in the red, it wasn't close to crossing over, which is what we like to see. It was in the green and sort of coming down. So that was the warning against the trade. 15-minute as well had broken the recent level, and the 15-minute was moving up. That's another warning in the trade. But I want you to look at how close this trade was to winning. Look at this. This is tragic. Oh, never mind. It wasn't very close. It's pretty far away from the profit target. That was the last trade of the day, which was a loss. So I ended the trading day slightly down, slightly negative. But we had 2 losses that could have been avoided. So was it really a bad day if we learned from our mistakes? Not at all. I'll see you in the next one. Take care now.